Prime Minister Mark Carney is pitching a new plan to bolster Canada's economy, creating a sovereign wealth fund. The fund, coined the Canada Strong Fund, will be used to help finance major national interest projects. And Carney says the projects will range from energy to critical minerals, agriculture, and infrastructure. And Canadians will be able to invest in the fund directly.
So whether a project is in Alberta, Quebec, or in the far north, high north, all Canadians will have a stake. Because this is about ensuring that you and your children and your children's children benefit from the prosperity that we are creating today.
So the price tag to kickstart this project is $25 billion. Little details available yet, but it's going to be invested over the next 3 years. And the Liberal Spring Economic Update tomorrow is expected to bring a lower than expected deficit, which could help pay for this. And that announcement sparked immediate backlash from the opposition.
Norway, Singapore, and Saudi Arabia run big budget surpluses, which they accumulate and then put into their sovereign wealth funds. Carney has no surplus and therefore no wealth to put in such a fund. He's talking about a sovereign debt fund.
Okay, to dig into this, we've got Jim Stanford. He is the director of the Centre for Future Work, and Rebekah Young, the vice president of economic policy at Scotiabank. Rebekah, it's good to have you in the studio. Jim, always good to talk to you. Good to see you both again. Rebekah, let's start with you. Help me, the basics of this. There are a lot of details we don't yet have on the Sovereign Wealth Fund, but where does something like this fit in the Canadian investment picture?
Well, I'd first start with, we've heard a lot about the $1 trillion investment plan. So far, the government, by and large, has been talking about where are we going to put our capital. I think we're going to see a shift tomorrow more onto how are we going to use that capital. And so the Sovereign Wealth Fund would be an example where now they are talking in more detail about how are we going to use that public capital, public equity to invest in these Canadian projects and companies. So I think devils will be in the details, but I think it is looking at the mechanisms of how. And yes, there is a $25 billion sort of seed capital going into that. I think, again, devil in the detail, and sort of policy wonks like me are going to go into the back details and look. I don't think it's all going to show up on deficits. So we've already heard that we're going to see tighter deficits going forward, because if you think of it at a very basic level, they plan to buy assets with that $25 billion. So
right, so on a balance sheet, it could net out in some way. But does this become a vehicle, Rebekah, for like the big institutional investors, pension funds to get involved in it? Like, how do we see this potentially operating? Because I initially thought like this could be the way they help finance that pipeline they want to get built.
Well, yes and no. So keep in mind, big institutional investors are already investing in this type of stuff.
Right.
This is an angle for the government to invest. So government to invest for Canadians' future. And it's got two components. I think Sovereign Wealth Fund in part is about saving for future generations. Now that aspect we have to see over time, because they have to buy first that equity stake. Then we have to see that equity generating revenues to be reinvested so that, our kids and our kids' have this big wealth fund that's accumulated capital. But there's another interesting angle that they're trying to introduce that they mentioned today, which is this retail sleeve, or this way for an average Canadian to invest alongside. But the idea, unlike a sort of a savings bond entity, is that there, in theory, should be upside. So with equity investment, with these sort of high risk, high return, there should be more upside over time for retail investors, but they don't have the sophistication of institutional investors.
Right. So Jim Stanford, on this, help me understand this. What is the value proposition for someone like me to invest in a Crown Corporation-run sovereign wealth fund if I'm looking to, have a better retirement, rather than like go into S&P 500 index funds or something that is pure private sector and pure capitalism?
Well, to be honest, David, I think that individual investment thing is more of a gimmick, frankly, for public relations purposes. It will not be the essence of the Sovereign Wealth Fund, nor should it be. If it makes people feel good that they're investing as part of an effort to build Canada's economy, fine. But the real action is going to be from the direct public equity and capital that gets put in, and then other partner investments that come in as well. The gold standard for a sovereign wealth fund is not just to have money to invest. It's to use it as a tool to transform and diversify the economy. That's what they've tried to do in Norway. That's what they've done in Singapore. The idea is use public capital as a lever to help develop industries, diversify the economy, build high-tech capacity, rather than just carrying on, with the day-to-day affairs, particularly for a resource-dependent economy like Norway or like Canada. So I think the ultimate goal of this should not be to just help a private project get going. You mentioned the pipeline that can't stand on its own 2 feet. The goal of this should be precisely to help diversify Canada's economy and protect the high-value industries we've got, particularly given the trouble we're having with Donald Trump.
Okay, Jim, first of all, I'm a little bit hurt that you don't think the success and failure of this depends on my investment. But what problem do you think this is solving in the economy right now? Like, if you're going to create this, it has to be a solution to something or filling a gap that's there. Where does this fit in based on the little we know as of right now?
Yeah, the problem is our economy is fundamentally too dependent on 2 things. Number 1, selling stuff to America. Number 2, digging stuff out of the ground and selling it abroad, period. We're very resource dependent. And, there are certain jobs and benefits that come from extracting non-renewable resources. But to become a fully fledged industrial economy, you need to do much more than that. You need to add value to your resources. And a sovereign wealth fund, because you're using a public interest criteria to help guide those investments, you can develop industries that might not develop otherwise. That's exactly what they've done in Singapore. The Temasek Fund in Singapore has been a tool of active industrial policy to help that country develop high-tech industry and become a leader in so many other industries that they weren't before. So in that regard, combined with the other policy levers that the government has, it could play a very important role. But we will have to see. They've got these consultations coming up, and if it just becomes a way to channel public money into more private projects that couldn't stand on their own 2 feet and flip assets rather than build public wealth over time, then it will be a boondoggle.
Rebekah, what industries would you suggest? Because right now the focus is on big projects, natural resources, get things moving, jolt the GDP, get to new markets. Where do you think something like this could focus if Jim's prescription is the right one?
I would really look at, 2 directions going forward. So one, I do think that we're realizing there is a strategic value to some projects that may not make commercial sense in last year's terms. But if we look at some critical minerals and rare earths on commercial terms alone, they may not necessarily look viable. But what we saw in the U.S. is that U.S. government has now taken stake in some of these companies, an equity stake. So I think that that's an area where we might see, and it is higher risk. So the other area that I'll be looking for, and Prime Minister Carney threw out this term asset recycling, which probably went over the heads of many people, but this idea of taking mature assets and using that as a source of proceeds to capitalize further this new vehicle. So I think that's interesting because Canada stands way above and beyond other countries in terms of how much infrastructure sits on government balance sheets. So I think there is a way of taking some of that mature infrastructure and bringing private capital in there on commercial terms while using public capital in the riskier stuff to de-risk it.
So on that, Jim, can you give me an example of that? Like, can you translate asset recycling into David terms, right? Like, what are we talking about here? What would that practically look like necessarily?
Well, in a way, Rebekah just confirmed one of my fears of how that announcement came out today. Mr. Carney did mention asset recycling. And in other countries, that is just a buzzword for privatizing public infrastructure. And I think that is where Rebekah was headed. And in most cases, that isn't necessary. We could be investing in these growing industries, high-tech industries, diversifying our economy without selling off the stuff that we have today. And for building public wealth over time, the whole idea that you'll invest with one hand but give stuff away with the other kind of defeats the purpose of building public equity over time. So frankly, I'm concerned about that idea of asset recycling. Mr. Carney's background as an investment banker might be leading him in that direction, but it sounds more like a fund for flipping assets rather than actually building the capabilities of the economy over time.
But Rebekah, does it necessarily have to be public infrastructure, or could it be something like the TMX pipeline, for example, which they initially said they were going to build it and then look for a buyer? I know it's been a while, but maybe they could do something there. I mean, what do you see going through that recycling?
I'll be looking for the details tomorrow. You know, we really only heard those words today. So,
Sure.
you know, I think, and quite frankly, the federal government doesn't own a lot of infrastructure itself. Most of that sits at subnational levels. So I think that's one component. I think we heard a lot of aspects of what this new sovereign wealth fund will do. So I think we need more clarity, and hopefully we get it tomorrow.
Okay, so Jim, tomorrow we will get some clarity on what they started signaling kind of last week, that maybe the financial picture is going to look a little bit better. Like, we're not talking surpluses and balance, but maybe the 75 becomes 65 or $55 billion on deficit. Kevin Page was on the show a few weeks back and said he expected a lower deficit because of better than expected economic performance and maybe some lapsed spending because of the late passage of the Budget Implementation Act. What are your expectations? What are you watching for tomorrow in the numbers?
Yeah, the deficit number will get a lot of attention, even though, frankly, the deficit is not our biggest problem these days. The tariff war and the war in the Middle East are our biggest problems. I think a couple of things. Number one, the Canadian economy did do better last year than we expected, despite Trump's tariffs, so that helps. Number two, Mr. Carney and Mr. Champagne have both learned the lessons of finance ministers past, which is to underpromise and overdeliver.
Yeah.
So there certainly was a lot of padding in that seemingly bad $78 billion deficit forecast for the fiscal year that just ended, and now they can claim victory and say we were the prudent fiscal managers and did better than we thought. It's the oldest trick in the finance minister's book, and we'll see them milking it tomorrow.
Yeah, Rebecca, like, you know, if they get the deficit down to 60 billion, like, never in my life did I think that would be good news. but here we are. Well, I mean, what are your expectations in terms of where we might see the fiscal track going and the economic projections?
Yes, no, I think I agree. Obviously, 2025 came off better. Now, I have to take some blame. Private sector forecasters give the federal government baseline. So, you know, we typically say history was yesterday, but we have to rewind back to what we thought, not in November, but October, late September is when, you know, these forecasts are set. At that time, nobody knew that the Canadian economy would be as resilient. So I think at that time, we all thought, you know, things were going to turn out a lot worse. But we, you know, I think we have to be careful, though, because we'll see probably front-loaded fiscal tailwinds, so improvements in the near term, and we should have room for upside, especially, unfortunately, the terms of trade shock is positive for the Canadian economy if it doesn't get a lot worse. So I think there's room for upside, but going forward, there are just too many geopolitical risks that economists can't forecast that we need to be wary of.
Yeah, Jim, this is the final point to you, is shock after shock after shock, right? You know, America is making a lot of choices, and it's costing the world a lot of money. The oil shock right now, perversely in the short term, we could see a lot of extra cash because of the higher price of oil, but in the long term, it dampens the economy, right?
Yeah. We won't see that cash. You and I won't see that cash. There's certainly a lot of cash coming because of that oil price shock. Most of it, the vast majority, is flowing to the oil and gas industry. Their revenues could grow by $100 billion this year. Very little of it, frankly, shows up at the federal level. The oil-producing provinces will catch a slice in increased royalties. But even if you live in Alberta, guess what? You're still paying 50 cents more per liter at the gas pump. So you can't say this is good for Albertans. You can say it's good for the oil and gas industry. Whether they actually reinvest any of that in Canada or not remains to be seen. So far, they haven't been. So this is actually, I would say, an overall negative for Canada, both because of the inflation shock. It will spread into other goods and service prices in coming months, and then the Bank of Canada will jump in with higher interest rates. That will hurt the federal government much more than any small slice of the oil and gas revenue will help them.
Oh, yes, for sure. I was not trying to say this is a good thing, Jim, just that oddly it does lead to some extra revenue while also then flattening the economy. It's just, you know,
Go figure.
It's economics for you. I want to thank you both, Rebekah Young, Jim Stanford. Thank you so much for being here.